Good evening and welcome back to Econ Recaps. There's a lot to cover today, so we're going to jump right into the news.
We're going to start off the news with something market adjacent. Today, Iran fired over 180 ballistic missiles into Israel, signaling an escalation in the conflict. The attack was in retaliation for the deaths of several prominent Hamas and Iranian leaders throughout the war. The wider world has been split, with Western nations condemning the attack and reaffirming support for Israel, while predominantly Islamic countries defend the actions. Both Israel and Iran have warned that the war efforts will further intensify in the coming weeks.
As mentioned yesterday, the ILA began their strike last night, bringing ports on the East Coast to a standstill. Understandably, both parties are looking for quick resolutions, but the shippers may have more incentive to meet the union's demands. First, shipping season for holiday goods is quickly approaching, and following the aftermath of Hurricane Helene, the backlog of goods can become rather large rather soon. Moreover, public support for the strikers is growing as the general population resonates with their grievances. Wages not keeping up with the skyrocketing cost of living, and fears that our jobs will be replaced by automation are common and personal concerns.
Health insurance provider Humana had their stock price decline following the announcement of its 2025 Medicare Advantage and prescription drug plan. The company is introducing several new benefits and is expanding coverage for annual eyewear and comprehensive dental services in most counties, while offering 793 individual Medicare Advantage plans nationwide. While this all sounds pretty good, lower than expected Medicare payment rate increases of only 3.7% have led many investors to be skeptical regarding these 2025 plans. This is because this increase does not cover rising medical supply costs, leaving Humana with a loss. Their stock fell 12% today, and Alignment Healthcare, a competitor who also released their 2025 Medicare plans, fell 15%.
Looking at the markets, the Nasdaq 100 dropped 1.4%, the S&P 500 fell 0.9%, and the Dow Jones ended the day down 0.4%. Conversely, oil closed the day higher, with WTI and Brent closing up 1.4% and 1.2% respectively. This is due in large part to the Israel-Hamas war and the dockworkers strike, both mentioned earlier in this video.
Looking at the tech sector, Apple closed the day down nearly 3% as Barclays analysts Tim Long and George Wang released a report this morning indicating the company cut iPhone 16 production by nearly 3 million units. The move further stoked investor fears that demand for the flagship product is waning.
Semiconductor companies had a rough go of it today, with SOX, the iShares Semiconductor ETF, closing down 2.8%. The sell-off was led by Nvidia, which closed down 3.7%, but they did not keep these losses to themselves. AMD closed down 2.6%, and Broadcom ended the day down nearly 3%. This comes as investors absorb what a potentially prolonged dockworker strike would mean for these companies. As many of you know, the actual manufacturing or fabrication of semiconductors is often done at TSMC's Taiwan fabs and then shipped over to the US. The market value for semiconductor companies is largely based on their ability to hit their rapid growth expectations, which do not afford room for extended supply chain issues.
Looking to McCormick's Q3 earnings report, it revealed that total revenues were flat year over year at $1.68 billion. However, there were significant improvements in other key financial metrics. The company saw a 17% increase in operating income to $286.5 million and a 31% jump in net income to $223 million. CEO Brendan Foley highlighted the achievement of positive global volume growth as a meaningful milestone, despite challenges in the Chinese market. Looking ahead, McCormick reaffirmed its sales growth outlook of 1% in either direction for 2024 and increased its earnings per share outlook to $2.84. Signaling confidence in its growth initiatives and cost-saving measures.
Nike reported its Q1 2025 earnings, showing a 10% year-over-year decline in revenue to just $11.6 billion and a 28% decrease in net income to $1.1 billion. Despite these declines, the company saw gross margins jump to 45.4%, indicating some positive trends in profitability. CFO Matthew Friend acknowledges that the results largely met expectations and highlighted early wins in key sports and innovation, while emphasizing that a comeback at this scale takes time. The company reiterated the appointment of Elliott Hill as CEO starting October 14th and mentioned that it repurchased almost 100 million shares this quarter. Tomorrow, we will hear from Levi's brand and Conagra.
Lastly, I'd like to take a moment to express our gratitude to the nearly 200 subscribers who have joined our community. Your support means the world to us, and we hope you find as much joy watching these videos as we do creating them. We encourage you to share your thoughts and opinions in the comment section below. Whether you have suggestions for improvements, topics you'd like us to explore, or just want to share your perspective, we're all ears. Thank you for tuning in, and we hope you have a great night. Cheers.